Hello and welcome. You're watching Closing Trades on ET Now. We're joining you live from the SBI Live studio. I am Snehal Shah. With me as always is Shrishti Sharma. And well, 1 hour of trade left for the day and for the week as well. But it looks like we're going to be closing on a high today. Friday is turning out to be rather well for the index, because 25,100 is something that we've not only crossed, but we look to have sustained above it, at least for now. Let's see what the next 1 hour of trade holds for us. So 0.4% uptick coming in on the Nifty index. For Sensex 2, you have 0.5% uptick coming in. Nifty Bank 0.2% higher. The India VIX has further cooled off 2.5%, around the 10.1 mark now. It's actually names like BEL, Bajaj Finance, that are both up 3 to 3.5%. So good move over there. You have Shriram Finance, Bajaj FinServ, Axis Bank, Eicher, Tata Motors. All of them are doing well. Now on the back of back-to-back block deals, you have Eternal that's under pressure, 1.6%. HUL is tanking. The overall FMCG index as well, down 1.5%. So that's the state of some of the top Nifty gainers and losers. But on the other side, sectorally, metals have all the shine today, with Hindustan Copper up 11% as we speak. Nifty Pharma, Auto, Banks, IT, Energy are in the green. But on the flip side, a fair share of sectors in the red as well. Losses led by FMCG, followed by PSU, banks and realty. So that is what the market structure and the market texture is right now. But certain names are standing out a lot, and it's actually been a rather stock-specific kind of day, given the kind of news flow we've seen.
Well, yes, Snehi, look at the move that we have seen in some of these defense counters, like we flagged off for our viewers in the morning as well, that the US officials may be visiting India during the mid-September onwards, and there could be some deals that are likely, and maybe on the back of that, these stocks are having a good run up. Just yesterday, we have seen some sort of a buying in select counters, but today, what a follow-up. All these counters are definitely trading in the green and flying high as well. Other than that, it's Bajaj Twins that are doing very well. Take a look at Bajaj Finance, Bajaj FinServ. These are some of the other movers in the trade right now. And off late, there has been no stopping for at least both of these companies. And yes, the pipe companies, of course, they are also lending support. Supreme Industries is now higher by 4%, while Astral is taking a little easy. Almost a 1.5% jump is what we are seeing on that counter on the back of the JP Morgan note initiation. So a whole host of companies that are in focus, but like you rightly said, that it's been a stock-specific action, though on the index front, we are comfortably trading above that 25,100 mark. But what your strategy be like amidst this market? That's the question. And to find an answer to that, we are being joined by Pashupati Advani. So let's go across to him. Mr. Advani, thank you so much for your time. A very good afternoon. And Mr. Advani, this big GST boost, along with that, so many tailwinds for the Indian economy specifically, but it's still not getting that enthusiasm from the FII side. Firstly, help us understand, how do you see the markets moving from these levels? What are the key factors that investors should be watchful of?
So what I'm actually seeing, which is very interesting, is that the IT companies are having difficulty trying to make their business models make sense. So since they are sitting on cash, they're coming in and they're doing buybacks. I mean, Infosys's buyback is pretty aggressive. And I think that's pulling the rest of the IT stocks. And it's probably going to make all the other IT stocks join and do buybacks as well. So that's one sector that seems to have, it was headed down. I mean, Infosys was down 20% before they announced this buyback. So I think the others will probably follow suit. On the other side, what I am seeing is a lot of IPOs coming to market. They're sucking all the liquidity out of the system. Plus, FPIs are leaving the market. Private equity people are also, getting tired of India. So those are the factors that's stopping the market going to 28 and 29,000. And as you said, it's just crossed 25 and it's gone up to 25.1. I think that's because of, there is some basic Indian momentum which is fueling the market, and the local markets seem to be quite okay. So I'm not so concerned about it.
Advani, you did say that a lot of these foreign entities, be it FI advisors or private equity guys, they're getting tired of India. But is now the time to get tired of India, or is now the time to get excited for India and what lies ahead? Because we've been in a slump for such a long time. Would it be fair to conclude that only better days are ahead now?
Well, I think what has happened is that you've got this situation of, there is still the sword of tariffs, okay? It doesn't look like it's going to be worse, but, the tariffs keep changing. So until we actually sign a deal and it looks like it's coming into place, exporters are having issues, importers are having issues. They don't know what tariff is going to be put on their merchandise when it arrives at the ports. So I think that is one of the things that it's very, very difficult to do business in this kind of environment. Even, for example, we've dropped GST in India, so that's going to take effect on September 22nd. So, today's September 12th. So for the next 10 days, there's going to be no business for all the companies that are benefiting from lower GST, and people are waiting to buy cars till the 22nd, for example. So, you've kind of put the country on hold for a month, literally, by putting it out there. So, it's the execution side. Yes, the government wants to do the right thing. They have done the right thing by dropping GST. That's going to be good. But, this 10 days, I don't think anyone's bought a car, if you know what I mean.
No, Mr. Advani, you're absolutely correct. Since we also keep talking to so many managements, they are just highlighting that for now the inauspicious period is also there, and along with that the GST cut is also expected, but they are any which ways positive post the first Navratra on the sales outlook. But lots more to talk about with you, Mr. Advani. But before that, it's time now to slip into a very short break. We'll be right back on the other side. Welcome back. You're catching us live from the SBI Live studios. And yes, the markets are holding up very well, but autos, they take the center stage. And in that, let's put the spotlight on one of the auto ancillaries, that is Sona Comstar. My colleague Sameer Dikshit caught up with Vivek Kumar Singh, who is the MD and CEO of Sona Comstar, to discuss the impact of GST rate rationalization on the auto sector and the auto ancillary sector. What's the outlook going ahead? Let's go across and listen in.
See, any duty or tax rationalization is always a positive for the industry because it spurs consumption. Depending on how much of this rate cut is passed on to the end consumer, we should see a boost in demand. So if, let's say, 7 to 8% is the vehicle cost reduction, you should see 10 to 15% demand increase. This is one of those natural price elastic industries have this reaction. So it is obviously a very positive thing. It's a great step that the government has taken.
In addition to this, do you think so that this will also help and provide enough scope for the expansion part as well for the industry, and you being one of the players?
Expansion of, sorry?
In terms of the expansion of the industry, the investment that you want to put in?
See, anything that spurs demand, right? If demand goes up, supply always inevitably follows. So if there is demand for more cars, there will be more capex. There will be more capex from suppliers. That leads to job creation. That leads to more money in the hand of consumers, which go out and buy more cars, and hence you create this virtuous cycle. So it is a great step. Always, reduction of red tape and reduction of taxes is always a great thing for the end industry, for the economy.
Okay, not just for this quarter, for this entire financial year. What is the larger understanding that you have that in terms of the overall analysis?
Again, depends on many factors, right? There are so many other geopolitical factors at play that any economy is not a thing in isolation. We do not exist in a perfect system.
Agree.
In a perfect system, what you can do is make one change and look at the reaction that happens in that system. Here, many changes are going on at the same time. So causality is also harder to determine. There will be what tariffs do we end up at against the US would have an issue.
Yes.
What happens to other sectors? What happens to services, for example? What happens to government spending? Because if there is a reduction in revenue, what happens to government spending? What happens to private spending? So there are many factors. Time will tell.
Okay, so that's the word coming in from the management of Sona Comstar. But let's also welcome on board Saumil Mehta, Head Alternate Research at Mirae Asset Sharekhan, to talk a little bit about the market setup on the technical front. What are some important levels he's watching? And Saumil, hi, good afternoon. Thanks for your time. And help us with just that, your outlook on the market right now. 25,100, we seem to be holding steady above that. But what is your near-term visibility for the Nifty, and where are you seeing an upside? To what level do you see a scaling in the near future?
Good afternoon to everyone. Yeah, comfortably above 25,000 now. And the next resistance is around 25,160. So that will be a very crucial hurdle. After that, the next crucial hurdle would be 25,270. So these are some very, very crucial levels to watch out for. My bias is positive. My view is positive. in the short term, in the medium term outlook both. So I'll be expecting a good run up on the upside above 25,250 levels. In the short term, I'll be expecting 25,250, and the next level, my next target would be around 25,500. So these are some targets. Support would be around 24,800, which is 20 and 40 daily moving average together. So it is very close. That will be a very, very crucial level to watch out for on the downside. Now, in the bank Nifty, again, ICICI Bank has just started moving up. Kotak Bank is looking good. Axis Bank is looking good. So private banks are looking good. PSU banks have already seen some strength. We've seen some strength in PSU banks yesterday and day before. So I think that should continue as well in the medium term outlook. So banks are looking good. My targets for Bank Nifty would be around 55,500. That will be short term target, and 55,800. That would be the second target. So buy on decline should be the strategy. The view is positive.
Strategy coming in for Nifty as well as Bank Nifty. But Mr. Advani, one such pocket that is doing very good today is actually the defense pack. And like we keep chatting with so many experts, nobody is having that confidence with respect to the valuations that these companies are holding. But some of the triggers and the news flow trigger that we are getting to understand is that the US Department of Defense officials are set to arrive in India between 16 and 19 September. There could be some deals that are likely. Mr. Advani, if you can help us with your take on the defense pack, because in the past couple of months, we have seen that share a bit of a correction. But what's your take on the defense counters? Good to enter or stay away?
So the defense counters have actually been a little bit, people who got in at the right time have made a lot of money. I think that I personally think this is not the right time to get in. Yes, there is a little bit of flutter coming because US Defense Department people are coming and they'll probably sign some deals. But the reality is that, in my humble opinion, wars are coming down in the US. They're not in the world. So as wars are coming down, then there'll be a de-escalation in defense spending across the whole board. However, each country has realized that they need to have their own defense and they have to be ready for it, and therefore our local defense industry is obviously poised to pick up some of that benefit, and so it's doing so. And some tie-ups I expect will happen between US companies and Indian defense companies, and so that is actually good for the sector. But which stocks is very difficult to tell, and I guess you need quote-unquote inside information to figure out which ones are going to benefit from them.
Taken, Mr. Advani, and all eyes are also going to be on how this entire defense pack moves on, because if you take a look at particular sectors today, you have the entire shipbuilding space that is doing very well from the defense pack. You have Mascot Ox that's doing okay. You have Garden Reach that's up. Okay, in fact, Garden Reach is up 8.5%. Very good move coming in over here, as is the case with Cochin Shipyard, a 4.5% move coming in over here. So some of the shipping counters are doing very well, and we'll be just bringing my colleague Sharad on board soon to help us understand what's driving this exuberance in the entire shipping space. But in the meantime, moving on to an exclusive, the Finance Ministry is meeting the PSU bank heads chaired by DFS Secretary. Slew of things are on the agenda for this two-day meeting. My colleague Prakash has joined us with more details on just this. Prakash.
The Finance Minister's meeting with PSBs is underway for a comprehensive review. In fact, the DFS Secretary is chairing a two-day PSB's marathon on the next set of banking reforms, a very significant development. In fact, the meeting is seeing participation from Chief Economic Advisor, Mr. Anant Nageshwaran, heads of public sector banks, the RBI Deputy Governor and Ministry officials. Various theme-based sessions and panel discussions have been planned. So far, discussions have been held on transforming Indian PSBs for global leadership and on the strategic roadmap of public sector banks. Along with that, the sources are indicating that the next generation PSB reforms likely to be discussed. Impact of various reform measures may be assessed, where use of AI governance, assessed quality and customer experience are also on the agenda. A wide range of discussions will take place on AI-powered banks of the future, where discussions likely to include modernizing PSBs and building globally competitive PSB for Viksit Bharat 2047. This meeting is very crucial in current scenario where Indian economy needs innovative and new funding mechanisms to meet future demand, and the role of PSBs will be very crucial.
All right, thank you so much, Prakash, for getting us all those details. But Mr. Advani, I wanted to have your take on financials, and in that, particularly the NBFC space, because Mr. Advani, we can keep talking about which sector is looking good, which sector is not, but some strong stocks which really want to make that move, we definitely see that in the markets. The one of them is Bajaj Finance. Look at the move. It has already been a multi-bagger. Today in such market, the stock is at its all-time high levels and now well above that 1,000-odd mark for itself. And so is Bajaj FinServ. Very stellar moves off late. Mr. Advani, what's your sense on the NBFC pack? Because in the rate cut cycle, the banks' NIMs will be compressed, but NBFC was looking favorable. But in that, is it good to stick with the leaders?
So the Bajaj twins are in a class of themselves because they have, a lot of their own funds. So it's to be looked at differently. But if you go to the smaller NBFCs, which have borrowed from banks, so they've borrowed from the larger NBFCs, and they're doing retail finance of white goods and small appliances and scooters, those are really going to need a kick in the economy to be able to make sure that their bad debts don't go up and also the NIMs remain. And that is a sector I've been personally worried about because it's kind of been unregulated, though RBI is trying to put some pressure through the banks to make sure that these people maintain certain ratios and things. But I think that the cat is out of the bag, if you know what I mean. It's already too far gone. The NBFCs are out there. So what we are seeing is obviously the other sector that are doing well are the NBFCs that lend against gold. Gold has been going up like a rocket. So at least they're not going to lose any money even if their clients default. So those two sectors are fine. But the other smaller sectors, smaller NBFCs who have taken money from private equity and are burning through their capital because they've just basically given what I call loans on computers, I'd be worried about those ones. But let's see what happens.
All right. But with this, Mr. Advani, we would like to thank you for taking the time out and speaking with us on a whole host of sectors. Pleasure. All right. But with this, viewers, time now to slip into a very short break. Lots more to talk about, and we'll also get you some of the trading ideas, but just after this quick break.